right? Because it's the day before Monday. And it's the day when you guys get a hint of, the week to come. So I usually, to be honest, try not to make, my analysis too obvious. But sometimes, like last week, Wednesday, I still end up doing what I try not to do. So my goal is to give you guys the specific days and times to study price and look for exactly what we teach here. This week is FOMC week, right? So Monday and Tuesday, by just looking at the screen, you can see that we have no red folder news. What does that mean? Does that mean that you can't trade on Monday or Tuesday? No. Does it mean that Monday and Tuesday is low probability? In some cases, yes. But you can trade on days that have no news folders, right? As long as you follow the model that we have been following for the last 2 or so months, right? What's that? What is that? Trading in the direction of sequential SMT, right? Which is the base of everything. And going forward, we will be focusing on the monthly and the weekly cycle, right? So we will be more times, right, trying to capture most of the weekly cycles move, not a 90-minute cycle move. But you can, right, if you're that advanced. But my goal, right, is to teach you guys how to get in at the high of the week, right? We want to be able to get in at the high of the week, not in the, the middle of the move, right? And all of that starts from looking at the economic calendar. So before Tuesday Prince price, before Wednesday Prince price, right? Before Monday even, there is even, the true week open forming. We can just use the economic calendar to see when we will be expecting explosive price action, which will more times than not, way over 80% of the times, give us the higher the low of the week, right? And we've spoken about this before, and you've seen this pan out beforehand, right? And you don't see anyone doing this like us here, right? Which is why it's harder to get into this group right here than Harvard. Trust me. It's hard to get in here. There are like thousands of other people on wait lists, right? The information is so good that, some people can't help but share it. A lot of people trying to leak the information, but what they don't understand is that if you don't have someone telling you what should happen beforehand, and then you need to literally see it happen, right? You can't get this from hindsight. You're not going to learn from just looking at hindsight charts, right? And that's why most of the times, when someone say, oh, they talk about this on Twitter, I don't care, because they won't understand. They will not understand. So that's fine. So Wednesday, you can see that we have FOMC, right? 2 p.m. And then again, we have, right, another FOMC press conference, right, at 2:30 p.m. That is not random, right? The span of time that's in between these 3 red folders and this one is not random, right? You can have, there are specific, and I don't even know if I should talk about this right now, but we'll do it. There are specific sequences that you will see per day in regards to red folder news. So it's not just, in chart that you have sequential SMT or you have sequential SMT, in regards to, price reacting to rejection blocks, right? Or wicks, right? It can happen even in the economic calendar. Because remember, the thing that we focus on most is time, right? And the days of the weeks that have the most red folder news, that you don't need to know what they mean. Like, I could just be looking at the chart right now and just this part, just make it blank and just look at these. And, I will have an idea of which day the low of the week will form, right? So just by looking at this, right? And remember, think in terms of sequential SMT, right? If we're talking about the NASDAQ and the S&P 500 and the Dow, we're not going to be like the low of the week for the three of them will be on Wednesday, or the low of the week for three of them will be on Thursday, right? Because if there is sequential SMT, one will form low of the week on Wednesday more times than not, and the other will form the low of the week on Thursday, right? And by looking at this, you can see that we have just 3 days of red folder news, all high impact days. So if we're having sequential SMT, when do you expect the low of the week to form on most asset classes? It's either going to be Wednesday or Thursday, right? It's as clear cut as that, more times than not. Remember, nothing is perfect, right? And what we are working towards getting to perfection, right? We're working to get to a level where our analysis is usually spot on, right? So here, right, you're learning how to read price better than anyone in the world. No one else knows this. No one else looks at price like we do. We get a feel for the market by just literally looking at the economic calendar. It's very powerful, right? So the best days to trade, when will that be? Wednesday. Wednesday when? In the afternoon session. Thursday when? In the morning session. And then Friday again in the morning session. As long as there is sequential SMT within a quarter where we have high impact news events, right? Either having the sequential SMT occur when at the exact same time that the news is released, or 30 minutes to an hour afterwards, then that sequential SMT will be high probability, right? Thinking about time. So you need it to happen in the quarter where you have the news being released. Looking at the DXY, the US dollar index, right? This is the monthly time frame, right? Usually, if you go back, which you can and study, because everything that I talk about, it's either happened before multiple times. Why? Because, price is algorithmic, so it just repeats itself at certain times, right? So here you can see that price is within a range-bound market condition, right? Which means that it's between two higher time frame swing points. It's between this one and this one. What makes this condition even more low probability, but listen now, just because it's low probability just doesn't mean that, we can't find moves, because we can on the lower time frames, right? It's just that when you look at the monthly chart, right, it's a bit difficult to decipher where it will go, but once we drop down lower, then it becomes easy, right? So again, we have this high trading into this fair value gap, right? And note that we didn't get to the consequent encroachment of this fair value gap, which is the 50% of the distance from this low right here and this high, right? Here you can see that we traded through the 50% of the level of this fair value gap, right? And since then, we've just been bouncing around in between these two higher time frame fair value gaps, right? Above here, right, there's liquidity, right? But also here and here, we have liquidity as well. Looking at price right now, just by looking at, the monthly chart, I can tell that, we have some, how would I say it without, interesting times coming, right? Very interesting times, right? And why is that? Right? The economy, right? And I'm talking about the economy in a whole, the world economy, right? Everything's like, a reflection of the dollar's price action. If you don't believe me, just check your charts, please, right? Even here, right? Remember when we had, everywhere locked down in COVID? Look at the spike. That's what, that's what a reflection of this is. When we had, remember when Ukraine was invaded by Russia, right? Remember, right? And at that time we had COVID, all of these things, right? So yeah, this was COVID right here. And that's what literally caused price to go down. So as you guys can see, whenever we have price action, right, getting ready to make a large market move or a large run on buy side liquidity, we usually have a smoke screen, right? And this is just the beginning of the interesting topics that we will speak about. Then we had price drop, failed to take this low out, which was not random at all, right? Whenever you see price do things like this, right, and then expands with this much velocity, right, with this much strength, right, no pullbacks at all until now, right? Price is getting ready for a very big move, right? Very big move. If price takes out this high, right? I'm just saying if price takes out this high, this is a very important high, right? A very important high, right? Going back, we also have this high right here, which, right, this pool of liquidity was formed by, I'll not say by, it was formed after 9/11. If you guys know what that is, very tragic accident, right? So we have a lot of liquidity above and below current price action, right? If price pushes here and there is sequential SMT, right, then we would be, long-term investors in stocks and crypto and so on, right? But currently, it's doing a lot of nothing on these time frames. So we have to be focusing not on the higher time frame cycles, right? Because we do have really high time frame cycles, right? We have cycles which each quarter consists of 4 years and 16 years and so on, right? Which, I will not be stating the true opens, right? Because people talk too much. But we'll get to that as, we progress. Right, so now price is trapped in between two higher time frame fair value gaps, right? And you guys can see the liquidity pools as well, right? So just as how you would have, I'll just say this now, to get some of you guys looking through your charts. Just as you have sequence SMT between, you can have it between year 1 of the quadrennial cycle and year 2 of the quadrennial cycle, right? When we get to those higher time frame cycles, right, you'll begin to see even sequential SMT between those, which is why we have price at these levels, because on those higher time frames, right, within those higher time frame cycles, we had sequential SMT, which is why the market moves, which is amazing. So right now, being within this consolidated area of price, we need a big event, to trigger the market to move. Right? It's not going to move like from here, right, and reverse unless we have a big event. So we do need a big event, and price will just continue to consolidate until then. Just as how we had price consolidating here, and then boom, COVID, right? Send this higher, dropped, and then reversed. Here, you guys can see the daily time frame for the US dollar index, Euro USD, and the Great British Pound. So last week, right, and we did get this correct, by the way, right? We wanted to see, we already noticed that we had a higher time frame sequential SMT, right? And yes, I know that my charts are empty. I want them to be empty. I do not want to have any markings on my charts at the moment, right? I've discovered that it's usually better for you to learn this way. And it's better to have you guys, mark at certain times, just do the markings yourself, right? It trains your eyes, right? If I draw a line, you'll just be looking at the line. You won't be looking at the specific candle or the low that I'm talking about. So first, you guys can see that here. And I will use my cursor, right? We had a precision swing point in the Euro and the Great British Pound. Can you see that? And remember what I said about the wicks, right, of the precision swing points. So this was the wick of the Euro, and this was the wick of the Pound. Here, you guys can see that we had SMT, right? This is another, form of correlation, which is more advanced than, even more advanced than, sequential SMT. The one that occurs between highs and lows, right? We have different types of sequential SMT, just as we have different kinds of SMT. So here we had price trade into the wick, right, of this precision point, right? This precision swing point right here, while we do have price trading into this wick, right? We also had sequential SMT between highs here and highs here, while price was trading into this level, right? And remember that here we took out this high, which was the previous yearly cycle's quarter high, right? So we took out December's high here. This one, definitely wasn't even close to it. And here in the US dollar, we weren't close to this low at all. Right? So due to the fact that we had a higher time frame sequential SMT here, and then we had sequential SMT for, basically just price trading into the wick of one position swing point and failing to do so on the other. And then we had a lower time frame sequential SMT. You can see that there is a sequence that, the SMT family follows, right? So we must have a higher time frame SMT, which follows by a medium time frame SMT and then a lower time frame SMT. This week, right, it's difficult to tell what's on liquidity right now. Overall, like, I expect the side to be taken out, right? So I expect higher prices for the dollar, lower prices for the euro, lower prices for the British pound. So I think due to the fact that we have the British pound taken out this side already, the British pound is more clean to me, if you understand what I mean. What would give us, the go ahead to do something? What would it do? What would give the go ahead to go into the charts and press a button? What? Right? We need to see, you already know what it is, sequential SMT, but it needs to be followed by another sequential SMT. So there is not just one sequential SMT, right? And price doesn't have to take a low out for a sequential SMT to be present, right? So we could see price even pull back, right? And you could see price take out, right? This might not take this low out, right? But, well, not now, but it could happen next month. But we will have more information as we go along, in the week. There are times when on Sunday, I literally need to wait for more, information. So I have to wait for Monday to see what Monday does. And sometimes I have to even wait for Tuesday. But sometimes on Sunday, we have an idea of what will happen, just as how the last Sunday we expected the pound to retrace. We expected lower prices for the euro. We expected higher prices for the dollar. Here you guys can see the daily time frame for the S&P 500 and Nasdaq and the E-mini Dow, right? So we have SMT at these highs right here, as you guys can see. So between this high and this high right here, there's SMT, right? You guys can see that. Also, something that's important to note as well, right? So we have SMT here. We have this high, right, in the Nasdaq taking this high out. Then we have, let me turn this on. We have this high, right, in the Dow, failing to take this one out. But right after, we have this SMT being formed in the Dow. And listen closely, right? This is important. I didn't even want to talk about this right now, but it's very important, right? So these highs usually have a lot of liquidity above them, right? Which highs? Highs that are formed by SMT, right? And it has to be the previous quarter. right, that you're reflecting on, right? So here, when we saw the Dow run above this previous SMT, right, while this one didn't, that is one of the strongest sequential SMTs that are, there. And then we have had this high failing to break above this high, again, in pertaining to the S&P 500. We have a lot of liquidity below price. You guys can see that we're way overbought, but we just need that event, right, to allow price to turn around. If you're a smart investor, would you be investing in stocks here, or would you be selling stocks here, right? You wouldn't be looking for, positions to hold for 10 years at these levels, right? You can see that the S&P has been grinding literally diagonally, like for the last few months, right? You can see the Nasdaq is way closer to, right, this low than the S&P is to this low. And usually once this happens, right, we'll end up seeing the Nasdaq either retracing, then going for both of these lows, right? But this one, more particularly, right? And remember, we're not two-sided, we're always one-sided until proven wrong, right? The only thing that's holding up the stock market at these levels right now is just one stock, which is NVIDIA. Is that how it's pronounced? So listen, anytime that stock just dips a little, it's just over, right? Literally, right? People will be buying stocks at levels that will be crazy, which I expect, sometime this year to happen. Great investment prices, right? Pretty sure that there are some other stock groups that are like right now using some indicator and saying that the indicator is bullish, so we gotta be investing in everything, right? Buy Apple, buy this, buy NVIDIA now, it's gonna double in price. Not me. No, here we're smart, we're not stupid. So until we see a clear, right, fact, a clear one-sided move, right? Unless we see, all of three of these asset classes at the same time creating displacement. We can see that this created a small amount of displacement, but also we have sequential SMT of these lows as well, right? Which usually just leads to consolidation. So it's not just that you need to see, one asset make or create displacement. All three of them must do so, right? All three of them must do so. So here, right, you guys can see that we did talk about price run above Wednesday's high last Wednesday. Then we had price drop within all three of these asset classes. And why did this happen? Remember, due to the fact that we had a higher time frame sequential SMT, right? In regards to the monthly cycle, right? Currently, we have Nasdaq taking this low out, right? Meanwhile, the E-mini S&P has not, and Dow has not as well, right? Just by looking at this alone, you do nothing. Remember, you do nothing by just looking at this. You don't just listen. You don't just go in your charts, right? And even if, we were looking at, for example, this right here. Remember, right here, we had sequential SMT, right? My cursor or mouse or whatever it is on the Dow right now, right? This specific high, right? Wednesday the 13th of March. That was sequential SMT. But what happened afterwards? We had price run above this high right here and then fall after. This price run was a lower time frame cycle sequential SMT. So people, right, that do not understand will go in and be like, okay, this is sequential SMT, I'll show right here. Price falls. Then it runs above, takes their stop. They're like, why did that happen? Because the algorithm, right, it's programmed to do this. It always does this. You don't sell the first high that runs above and creates sequential SMT. You wait for that high to be run out during the specific times that you already know, right? Do you understand? This will, right, you're not going to see, for example, you don't want to just see price create this low and then gone upwards. No. You want to see price create a low. Then wait for a sequential SMT. And if that doesn't happen and price just keeps going, you leave it alone because then you're just working within low probability conditions. Right? You don't just see this right here, right? Because this was sequential SMT as well between this high and this high. This was sequential SMT. But this was the real sequential SMT. And why did this one, not allow price to just keep falling? Why not? Because we did not have a lower time frame cycle sequential SMT, which we did have here. When this candle, right, traded above this high. So between this sequential SMT and this one is the one that will work. So anytime you're in your chart and you're trying to use sequential SMT and you're just on one time frame using one cycle and you're like, oh man, I shorted here and it fell and then price run above and it got messed up and just fell after. It's not working. No, it's not working. It's you are not working. You're doing something that I did not teach you. Right? And this is as close as you'll ever get, right, to perfection, right? And when you're looking at the monthly time frame, right? When you look at the monthly time frame, there's the monthly cycle, and we have a monthly sequential SMT, right? Which occurs on the 4-hour time frame. That's the time frame that you use for the monthly cycle, right? And you're learning a model right now that you can use. So usually what will happen is you have a fake sequential SMT first, and then you will have the real one afterwards. It's not just one sequential SMT fall. It's no. Those moves are low probability. You don't want to be taking place in those moves. And even if it happens, it's fine. Because you will find the perfect setup when it is time. So we'll just look at this, right? Segment of price action. More particularly, we'll look at the Dow, because the Dow was right? The cleanest. So as you guys can see, right? Try to make it, big enough. That's what she said. Anyways, I'm sorry. I watched too much of that show. What's it called? The Office. It's insane. Michael, hilarious. Okay, so this high right here was the high of the first quarter of the month, right? So when we traded above this high during Q2, this trade above this high was sequential SMT. But what happened, right, after price traded above this specific high was the algorithm engineered liquidity. Liquidity was left here, right? So when price traded here the first time, right, and left a swing high, liquidity will be left above the swing high. It does not have to be, equal highs. The most liquidity is found above swing highs, right? Which is the candle in the middle being higher than the candle to the left and the candle to the right. And no one else is going to tell you this because no one else understands this. No one else uses this. Not even Michael teaches this. Does he understand this? Of course he does, but he's not going to teach it because it's too good. Right? So the first break above, right, a previous quarter's high, right, which causes sequential SMT, is usually not sequential SMT. That's usually just your entry, right? So this high right here would be where you want to sell above. So you can see price broke below this low, right? After breaking above this high, then we had price rallying. Here is where I remember we were when I said that I wanted to see price run above this high. And I was talking about the Dow at that time, right? And then we'll see lower prices. You remember that? And then look at this move. If you could find that one setup, per week, right? Every week. Okay, let's not say every week. Every other week. You can find that perfect setup, right? That it's not hard to spot, right? This is literally Michael's one shot, one kill on steroids. Listen, are you a charter, student? You should be, very happy right now. You already have the experience, but Michael just taught you a lot of nonsense, which is sad. But that's okay. Anyways, so this high right here is where the real liquidity lies, right? The first swing high that is formed after price creates sequential SMT, right? Expect that high to be breached, right? And if this is a lower time frame sequential SMT, then that's it, shoot. Just shoot. If you're scared of, shorting about this high, you can do this. And, right, so you can just do this. And then you can you can put your stop loss right here. But what would not, make you scared, or what would, make you less likely to have such a huge stop loss is that you would wait for a lower time frame sequence SMT after you have this one, which you don't have to. First of all, remember, this is the 4-hour time frame. You know how much setups is in this candle alone? A lot. This is not a small move. This is a big move. And just as how we have, this sequence between the monthly cycle and the weekly cycle, right? You can find this on the weekly cycle and the daily cycle, right? You can find this on the daily cycle and the 90-minute cycle. And yes, you can find this on the 90-minute cycle and the macro cycles, right? So whenever, right, price leaves the buy, stops above this high, right, falls, takes out, sell stops here, right, because you guys can see it fell below a swing low, right, which was formed within a fair value gap. So the only things that we're interested in are highs and lows and gaps. We don't really care about order blocks that much, right? Or breakers, because breakers or order blocks will not work without imbalances, which is why we focus on imbalances, right? And if I start talking about those things, then you will, not learn how to read price, right? I'll just be drawing you guys out, without you seeing any improvement in your trading or your anticipation of price action. So even here, you can even be a buyer below here. Why? In anticipation of price to run above this high. Why? Because there was not sequential SMT, right? So for today, I think that's it. I've been talking for so long now. I haven't even realized that I've been talking for so long. But Wednesday, we'll be back with better things. Better things, new things that actually work. We'll be, attempting to, and I love Wednesdays when there's news on Wednesday and Thursday, right? Because then I can talk about the high of the week, which will usually form on Thursday, between Wednesday and Thursday, when we have news on those specific days, right? Usually can get the weeks one shot, one kill on those specific days, right? So yeah, we'll be back Wednesday. You do not need, right, to, right, I'll just leave it right there. Been talking for 47 minutes right now. So, yep. I hope you guys have a wonderful week. I hope that this was good. All right. As you guys can see that, right, we have been using, this specific method of anticipating reversals without higher time frame periods for a while. We've been doing this without any clear, people would just be looking at price and be like, okay, I don't understand this because there is no quote unquote order block or no higher time frame fair value gap, but we can go in and find moves. There was a time I didn't even believe that this was possible, right? But As you guys can see, it is. And what are we using? Just time. Specific high that formed a specific time being run out by specific, highs again, at specific times. So basically, it's a swing high being formed above another swing high, right? Because this is a swing high, and this swing high was formed above this swing high, right? So that's how price sees it. It's usually either this swing high being formed above this one, or if there is sequential SMT, right, in another asset, which there was, you would have this swing high being formed below this swing high. So the swing highs are what's important, right? If you see price trade above here, and then there's a swing high that forms, right? Just as though we had one form, right, on this candle, right? Even here, someone would be, what I would say, very, cautious, into trying to anticipate this move going down, right? First of all, I said that we expected price to just go down, right? Remember. So there is either one of two things that will happen whenever we have, a fair value gap being formed. It's either price is going to fill it or not. And comparing the indexes, right? If you're looking at, the index futures, whenever one fills a fair value gap after the sequential SMT, right? Then you don't have to expect the other one to fill its fair value gap, right? Which is why we had, if I believe correctly, we had the NASDAQ, right, filling its, which is what you would call a sequential SMT between a high and the gap. I hope that you guys have a wonderful day. I'm spilling too much sauce. It's 15 minutes now. I'm just going to force myself to go. Goodbye.